Hi, Assalamualaikum and greeting to our lecturer, Madam Siti Shakila. My name is Nur Sarah Nazira binti Mohizam. My metric number is 2022634888. First of all, I would like to thank you to our lecturer for guiding us in order for us to finish this project. For this project, we had to an interview to a business, whereas the objectivity is to gain the information about the business. For the business we have been chosen is Satu Catering. Satu Catering is owned by Mr. Muhammad Shafiq bin Suhaimi, is 33 years old. He is running a small food business by renting a space in Mamak Restaurant located at Kayu Ara, Petaling Jaya. He started the business with 10 years of skill and experience in handling food, as he growing up with a family that does the business of their source of income. Satu Catering is registered under SSM as a sole proprietorship and owned by Mr. Shafiq. As a sole proprietorship, the capital is contributed by owner. Satu Catering business operation is Monday through Friday from 8 until 5. Satu Catering business or activity as a supplier nasi lemak for morning breakfast at Mamak Restaurant and also accepted order for ceremony and event. Encik Shafiq also helped by his wife and his mother to cook a variety of dishes for lunch. As we can see, the menu have been prepared by them is a normal dishes that Malaysian people like to eat for their lunch meals. For the example are ikan keli masak sambal, ayam masak sambal, sayur kangkung, ayam masak kari, kepala ikan masak kari, and many more. As we can see at the picture, Mr. Shafiq is very enjoy to prepare the food and selling it to the customer. Some of the customer are his regular customer who came to his place for lunch. I will end my presentation and pass to the next presenter is Kadir Jalani. Thank you.
Thank you, Sarah. So before I start explain about the business characteristic, it is important for us to know the type of business from the previous explanation. Through the explanation of the background of the business just now, we can conclude that Mr. Shafiq business as a sole proprietorship. So now let's see the first characteristic of the business. For the first characteristic is registration. This type of business organization must be registered with the business registrar under the Business Registration Act 1957. So easy to understand that register with the SSM. SSM is Suruhanjaya Syarikat Malaysia. If we look at Satu Catering Services, which is owned by Mr. Shafiq, it has already been registered with SSM since it started doing business in 2013. So next is own. This business is owned by one person, as you all know that sole proprietorship owned by individual only. In this case, in this Satu Catering Services, it is owned by Mr. Shafiq alone and has several assistant staff. Next is management and control. For sole proprietorship, it's managed and controlled by the one owner and controlled by the one owner. For Satu Catering Services, it is managed by Mr. Shafiq. Mr. Shafiq is himself. Only Mr. Shafiq has the right to determine all the management and action plan that to be taken to implement his business. The next one is capital. Sole proprietorship capital is contributed by the owner. it happened in Satu Catering Services. It is fully capitalized by the owner, which is Mr. Shafiq himself, and this is closely related to the next characteristic, which is profit and loss. So for the profit and loss in this type of business, the profit belong to the owner, and any losses incurred by the bond will be borne by Mr. Shafiq. And the next is liability. Unlimited liability. It means if the business fail and the asset are not enough to cover the debt, the payable has the right against the owner personal properties. And the last one is book and account. There is no legal obligation to keep the books and prepare the account, but for Mr. Shafiq himself to ensure that the business is managed well, it is recommended that he run a business account to access the state of the business account more easily. So that's all. So after I pass to Mr. Amar to present about the classification of business.
Thank you, Mr. Haidir. Next, I will explain about business item in Satu Catering Service. There are 5 elements of business item in managing the business because it will provide extremely useful information to the user. These 5 elements are include asset, expenses, liability, capital and revenue. First of all, I will go to asset in Satu Catering Service. Asset are divided by 2, which is current asset and non-current asset. Current asset defined as something that can be quickly converted into a cash. As sole proprietorship business type, the owner of Satu Catering Service has relied on their own resource for financing, such as cash in hand, cash at bank, and inventory. For non-current asset are physically item which have long-term investment and the item is last over a year and have financial value to a company. The non-current asset for Satu Catering Service is van for transportation, kitchen equipment for preparing food and beverage, and furniture. Moreover, liability. Liabilities are everything a business owes now and in future. Liabilities are divided by 2, which is current liability and non-current liability. Current liability can define as short-term liabilities that need to be paid back within a year. For non-current liability, can be paid back after a year. The liability in Satu Catering Service is loan from Tekun Nasional and Hijrah Selangor Scam. Tekun Nasional is to provide easy and quick financing facilities to Bumiputra to start and further develop their business. Selangor Hijrah Scam is an initiative of the Selangor state government to expand the middle class in the state of Selangor through the implementation approach of an efficient additional capital distribution system to small business owner. Next, the capital. Capital is known as net asset or resource like cash, equipment that company can use in its operation. The capital for Satu Catering Service is the owner use own cash, got financial assistance from Tekun and Hijrah Selangor Scam to maintain and improve the business. Then revenue. Revenue are amount of income generated by the sale of goods related to the business from selling food and beverage and service for outdoor catering. The business will get the revenue. Finally, expenses. Expenses is the cost of operation that business incurs to generate revenue. expenses from this business, which is salary for the worker, maintenance for the machines, for kitchen equipment, petrol expenses, water and electricity expenses. So that's all from me. Next, I will pass to Mr. Alif Irfan.
Thanks, Amma. Hey, I'm Alif. Stick around me for the next 7 minutes and you will see how Satu Catering relates to our book. Let's do this! The first step in financial accounting is to identify the transaction. According to the owner, it is like a normal restaurant flow where customers having their meal and pay instantly either by cash or bank transfer. There's no credit transaction from acquiring raw material until sales of goods. This starts on 1st March 2021 and continue through to 31st February next year. So what next then? Okay, now the second step. It is time to prepare a journal entry. A journal is a record of a financial transaction. There are 7 types of journal, which is purchase journal, sales journal, return inward journal, return outward journal, cash payment journal, cash receipt journal, and also general journal. To keep this video simple, let's say Satu Catering managed to get 500 ringgit sales per day. The journal entry will look like this. A date of the transaction, the accounts affected. In this case, that is debit cash by 500 ringgit to increase asset received and credit sales by 500 ringgit to record income gained, which means this transaction affects at least 2 accounts and the total debit is equal to total credit. However, from previous interview session, we conclude that Mr. Shafiq record his business transaction using a very basic single entry bookkeeping. The journal he used is called cash book. Provide details like date, description, and whether it is an expenses or income. For example, he has 1000 ringgit cash in hand. When received sales revenue 500 ringgit, he add the amount to the account balance and document the new account total, which is 1500 ringgit. When he paid for rental expense cost 100 ringgit, he minus the amount from the account balance of the previous line. After adding and subtracting all the revenues and expenses, he can determine cash balance and do the necessary. Most and even small businesses use double entry bookkeeping for their accounting needs, but not for Satu Catering. The third step is to post the journal into a ledger. A ledger is a book or a database that stores a complete record of all accounts. There are 3 types of ledger, which is purchase ledger, sales ledger, and general ledger. But since Satu Catering doesn't involve in credit sales nor credit purchase, let's proceed with general ledger. So how do we get this journal into general ledger? You post it to your accounts. This journal affects 2 accounts and we can picture what they look like by drawing out 2 T's and labeling them cash account and sales account. Debit the left hand side of your cash account by 500 ringgit and credit the right hand side of your sales account by 500 ringgit as well. When we total this up, you now have 1300 ringgit in cash and you have made 1300 ringgit sales revenue. But there's a lot more accounts. It has a whole collection of assets, liabilities, capital, expenses, and revenues accounts stored in your ledger. So you post this journal during 1st March to the end of your financial year. So let's fast forward to 31st February 2022. The next step is to prepare a trial balance. What is a trial balance? It is an internal report that summarizes the closing balance of all ledger's accounts. It can help us check for error, but ultimately we use it to prepare a financial statements. Building a trial balance is quite simple. You list down all your accounts and their closing balances. That's all. As usual, debits on the left side and credits are on the right side. At the bottom of your trial balance, you have your total debit and total credit. This should match each other exactly because the accounting equation is always true. Unfortunately, Mr. Shafiq's recording method cannot perform ledgers and trial balance. Single entry bookkeeping has one entry per transaction, while double entry bookkeeping have two entry per transaction, which is a debit and a credit. He stated that the system he is practicing now suits the business well because the company is small with low volume of activity. Let's proceed to the final step to create a financial statement. It is an accounting report that summarizes a business activities and performance. These are the external reports designed to give your investors, lenders, or creditors an understanding of your business financial health. Using the trial balance, we can create the statement of profit or loss and statement of financial position. Now let's check it out, the SOPL. They summarize your business revenues and expenses over a period of time. It gives the readers a glimpse of your financial performance and profitability. This is how SOFP looks like. It gives a snapshot of your business assets, liabilities, and equity at a single point in time. External users can see what you own and what you owe at the end of your financial year. Back to Mr. Shafiq's business, do you think he still can produce something like this? The answer is yes, he still can calculate net income by subtracting total expenses from total revenue, but he cannot develop a statement of financial position because it doesn't track company's asset and liabilities accounts. Together, these steps make up the accounting cycle, and we can understand how Mr. Shafiq, as the owner of Satu Catering, record its financial transaction. There are multiple ways a company can maintain its finances. An advantage of the recording process implemented by Mr. Shafiq is that it is simple and straightforward. This suits business owners like Mr. Shafiq who are not interested in accounting and cannot afford to reduce his margin to hire an accounting expert. Mr. Shafiq don't even need to subscribe expensive accounting software. He only uses a pencil and a piece of paper to record revenue and expenses at low cost. By using this way, he still can determine on which side they are spending too much and identify which area to cut costs. On the other hand, there are two disadvantages. The first one is Mr. Shafiq is not able to document any assets and liabilities his company have. This can prevent him to monitor and may not present a most accurate report of his company finances. The number two is recording error might lead to poor judgment. With single entry, there's no debit, credit, and trial balance. For example, a business owner might record revenue as 5,000 ringgit instead of 500 ringgit and may not notice to correct this error. This will lead to poor decision making when company try to expense something it doesn't have enough money to purchase. That's all from us. Thanks for watching. Hope to see you again. Bye bye.